And here are the crypto top headlines. Coinbase CEO Brian Armstrong on regulation. It's really imperative that we get this right. Plus, Ripple cancels plan to buy Fortress Trust. Next, Kraken to launch stock trading in the US. Also, IOTA aims for a comeback with network enhancements and ecosystem fund. Welcome to Crypto Top Headlines, bringing crypto's news to you. Our first top headline is Coinbase CEO Brian Armstrong on regulation. It's really imperative that we get this right. This was an interview from this morning by Aaron Ross Sorkin on CNBC.
Coinbase CEO Brian Armstrong has been spending some time in Washington, D.C., talking to officials about the crypto industry, even as Coinbase looks to expand overseas. I spoke to Armstrong yesterday and asked him about the event he organized called Stand with Crypto Day.
Yeah, Stand with Crypto Day. So, what this is really about is there's 52 million Americans in the U.S. who've used crypto now. That's 3x as many as own an electric vehicle. It's more than the number that hold union cards. It's a major constituency in the U.S., and many of them are quite frustrated that the U.S. does not have clear rules on the books yet. And it's created this unfortunate environment of kind of regulation by enforcement, which is pushing a lot of this industry offshore. So I'm here in D.C. with 40 founders of other crypto companies, and it's been really exciting just to get the members of Congress to meet people from their own jurisdictions or districts that are starting companies and trying to build real value and innovation and jobs here in the U.S. in their own district.
Now, let's talk about the timing of this, because it is on the eve, if you will, of the trial of Sam Bankman-Fried, which starts next week.
Mm-hmm. Well, that's been a really unfortunate industry event that I was hoping we could kind of turn the page on. But unfortunately, the trial is so salacious that it does keep getting headlines. Look, I think that if you go back in time, this reminds me a little bit of like the Mt. Gox issue that happened. And we have to be honest and say that there has been some negative, bad people who've been attracted to this industry. But, they should be prosecuted to the full extent of the law. That does not mean that the industry writ large is based on that. In fact, there's 40 founders, as I mentioned, that are here with me in D.C. that are building this in a trusted and responsible way. They may not get the same salacious headlines, but they are here and they're going to have a bigger impact over time if we can create clear regulation that protects consumers, avoids things like FTX, but also preserves the innovation potential.
What kind of reaction are you getting? And I know you've been quite critical of critics of the crypto industry, of course, Gary Gensler, Elizabeth Warren, and others. But do you see anything shifting as you're there in D.C.?
Yeah, actually, from our perspective, there has been a pretty positive development. We saw two bills earlier this year that got bipartisan support in the House committees. There was a market structure bill and a stablecoin bill. I think that was really positive. We also saw the judicial branch of our government send a very clear signal in 3 separate court rulings by 3 separate judges that the SEC's approach was not working. It was arbitrary and capricious. It was unlawful in some cases. And so that's sent a very clear message to Congress as well that they're going to have to step in here and act by creating new legislation.
What is the state of play with the SEC case versus Coinbase?
Yeah, well, we feel very confident about the case. I mentioned there's been 3 judges that have ruled in other cases around crypto, and some of those facts are relevant in our case. For instance, in the Ripple and the Terraform case, the judge ruled that the underlying assets themselves were not securities. That's an important fact in our case as well. So, look, it would have been better if the regulator had simply published clear rules, had engaged in a rulemaking process as they're required to do under the Administrative Procedures Act, and that way we could all follow it. But in the absence of that, it appears now that the courts are going to have to come in and create some of that clarity for now, and I think ultimately it'll end up being Congress.
One of the things that you are doing is expanding internationally and doing so aggressively, I imagine, as a function of the regulatory or tight regulatory body in the United States. Is that what's happening?
Well, Coinbase is based in the U.S., and we're not leaving the U.S. In fact, this is the biggest market for us, and we're the leader in it. But we also want to be an international company that allows us to, help many people around the world benefit from this technology as a way to update the financial system. So actually, we do have a pretty exciting announcement about that. Today, we're announcing that our international exchange got regulatory approval to offer perpetual futures or derivatives trading to retail customers. And we're really excited about that just because it's a way to bring in a whole other set of people around the world, and actually in over 100 countries, who can start to participate in this more open and fair and free financial system.
When you look across the globe, do you say to yourself that other parts of the world are now much more favorable towards crypto? And I know you've made the argument historically that from an American perspective, you don't want to see American companies effectively move abroad.
Yeah, unfortunately, I would have to agree with that at this point, the U.S. is behind, severely behind, actually. So if you look at the other G20 countries, 83% of them now either already have crypto legislation on the books or it's in progress. It's being drafted, implemented. The U.S. is behind here, and we've seen the share of the U.S. job market around crypto shrink from about 40% to now it's about 29%. And it's due to this lack of regulatory clarity. So I think when I speak with members of Congress, I had a great meeting this morning with Nancy Pelosi, for instance, and a number of other meetings later today. The general broad consensus view, it's kind of common sense. It's let's get some clear rules on the books, let's protect consumers, make sure that kinds of things like FTX can't happen, and then also preserve the innovation potential of this industry.
What do you think, though, has to become the inflection point for that to happen in the United States? I know you've talked about some of these lawmakers looking more favorably upon what you're doing in the crypto industry, but there still seems to be this resistance. There still seems to be this worry that it's almost too hard to regulate some of these cryptocurrencies that even if you could regulate them here in the U.S., that you can't regulate them properly outside the U.S., and that unto itself creates the conundrum.
Well, I'm not sure I'd agree with that. As I mentioned, the vast majority of the G20 countries have already kind of put their regulatory framework in place. We've seen that now in Singapore, in Hong Kong, in the UK, in Brazil, in Australia. So it's really just the U.S. which is kind of an outlier here, and that's something that I think is very much within our power to control. In fact, I would say it's a national security issue. If we want the U.S. to be relevant as a financial hub, a tech hub, to project American soft power through our reserve currency and with U.S. dollar stablecoins, it's really imperative that we get this right.
I saw you took to Twitter, or I should say X now, in regard to JP Morgan Chase limiting the way they're allowing customers in the UK, that is, to interact with cryptocurrencies. What do you think is going on there?
You know what? I'm not sure. I hope to find out more information on that. But once in a while, we do see a bank somewhere in the world that decides they want to really just deplatform this whole industry. And I don't think that's okay. I don't think that's the role of banks in our society. I think the government should decide what is allowed and what's not. And the government in the UK, through Rishi Sunak and Andrew Griffith, the city minister in London, have made it very clear that they want the UK to be a Web3 and crypto hub. They're trying to attract businesses there. And so I was disappointed to see Chase UK's stance on that. I hope that that was a misunderstanding that'll be clarified in the coming weeks.
Our next top headline, Ripple cancels plan to buy Fortress Trust. While this outcome is different from what was originally planned, we'll continue to support them and hope to work together in the future, said Ripple CEO Brad Garlinghouse. Ripple said it won't go forward with its outright acquisition of Nevada-based chartered trust company Fortress Trust. A few weeks ago, we signed a letter of intent to acquire Fortress Trust. We've since made the decision not to move forward with an outright acquisition, though Ripple will remain an investor, Ripple's CEO Brad Garlinghouse said on social media platform X. Ripple said on September 8th that it intended to buy Fortress for an undisclosed amount. At the time, a person with knowledge of the matter said the price tag was less than the $250 million Ripple paid for custody firm Medico in May. The day before, Fortress Trust disclosed a theft of customers' cryptocurrency, later revealed to total close to $15 million. It pinned the blame on an unnamed third-party vendor that had fallen victim to a phishing attack. Coinbase later identified the vendor as Retool, a San Francisco-based company with Fortune 500 customers, which had built a portal for a handful of Fortress clients to access their funds. Ripple said the acquisition talks predated the theft, but it accelerated them. Fortress Trust, which provides financial and regulatory infrastructure for blockchain companies, was formed by Scott Purcell, who has a long history in the industry. He was CEO of crypto custodian Prime Trust until 2020. Years after he left Prime Trust, the company was ordered into receivership after fellow custodian BitGo terminated its proposed acquisition of the firm. The Fortress team is incredibly talented and has built products solving real customer problems. While this outcome is different from what was originally planned, we'll continue to support them and hope to work together in the future, Garlinghouse added. Our next top headline, Kraken to launch stock trading in the U.S. Kraken cryptocurrency exchange is set to launch stock trading in the United States in first push beyond crypto. Renowned crypto exchange Kraken has announced its foray into the world of stock trading in the United States. This bold step signifies a significant convergence of the digital and traditional financial markets, potentially reshaping how investors buy and sell stocks. Kraken makes ambitious leap. As highlighted in a recent report, Kraken's strategic expansion will be facilitated through a newly formed division known as Kraken Securities, dedicated to providing seamless stock and exchange-traded fund trading services. While this transition may seem daring for a crypto-focused company, it demonstrates Kraken's commitment to innovation and meeting the evolving needs of its users. Undisclosed sources familiar with the matter revealed that Kraken already possesses the necessary regulatory permits in the UK, underscoring its readiness to operate within established financial markets. In the US, the company has taken steps to secure a broker-dealer license from the Financial Industry Regulator Authority, FINRA, highlighting its commitment to adhering to regulatory standards in the American market. While Kraken's entry into traditional financial assets is groundbreaking, the company is taking a systematic approach. As per reports, Kraken is planning to launch its stock and ETF trading service in 2024. This timeline allows the exchange to diligently navigate the regulatory landscape, refine its offerings, and ensure the seamless integration of these new assets into its existing platform. A paradigm shift in finance. Kraken's venture into stock and ETF trading signifies the ongoing convergence of traditional and digital financial markets. As cryptocurrencies continue to gain mainstream acceptance, the lines between these two worlds are becoming increasingly blurred. Kraken's bold step is not just a reflection of its commitment to innovation, but also a recognition of the changing landscape of finance. Kraken's journey beyond its crypto roots exemplifies the broader transformation occurring in the financial industry, where technology-driven solutions are redefining how we invest, trade, and interact with financial assets. In April, the London Stock Exchange Group announced that it would offer Bitcoin index futures and options derivatives trading and clearing services this year. The LSE teamed with a digital trading platform to provide users the opportunity to invest in Bitcoin. Similarly, the Tel Aviv Stock Exchange also published a draft requesting regulatory authority to allow crypto trading on its platform. Next top headline, IOTA aims for a comeback with network enhancements and ecosystem fund. The once prominent crypto project IOTA is planning a resurgence with a series of initiatives aimed at boosting network development and token value. After losing market share to newer blockchains following a hype-fueled rally in 2017, IOTA is set to release an upgraded network known as IOTA 2.0, which will introduce smart contracts, Layer 2 blockchains, and decentralized finance applications to the network, CoinDesk reported on Friday. One of the key improvements involves the introduction of a new ecosystem fund backed by the release of new MIOTA tokens. Additionally, a hard fork named Stardust, scheduled for release on October 4th, will lay the technical foundation for IOTA 2.0 expected to go live in Q4 of this year, the report said. General Purpose Virtual Machine. Smart contracts on the IOTA network will be implemented through a General Purpose Virtual Machine, or VM, which will generate more demand for MIOTA, the project's native token. The reputation system for nodes within the IOTA network, called MANA, will play a significant role in enhancing security and fostering demand for applications and Layer 2 networks on the IOTA platform. New Ecosystem Fund. IOTA co-founder Dominic Shiner explained the need for these initiatives, emphasizing the importance of funding to compete and grow in the cryptocurrency market. An ecosystem fund will be established to incentivize developers and teams to build on the network, and the fund will be backed by the gradual release of new MIOTA tokens. Following the hard fork, there will be a temporary bi-weekly token release lasting 4 years, leading to an average annual inflation rate of 12%. After this period, the circulating supply of MIOTA will reach 4.6 billion tokens. IOTA has also established the Tangle Ecosystem Association in Zug, Switzerland, and the IOTA DLT Foundation in Abu Dhabi, UAE, to support its ecosystem, developers told the news outlet. The Tangle. IOTA is not a traditional blockchain, but instead calls its network a Directed Acyclic Graph, or DAG, called the Tangle. IOTA originally promoted itself as a way to send nearly free machine-to-machine microtransactions. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.